First thing I want to do is commend you for connecting the dots, let me say, from not just this huge debt overhang, but the effect it will have on buying a house for the first time, of being an entrepreneur and starting a business, of reserving money starting very early for retirement. This, to me, is one of the most daunting challenges we have to face going forward. We could have a whole generation that just can't get started until they're maybe in their mid-30s of doing things that we assume could and would be done in your mid-20s. So I think that's an important point. Second, just jurisdictionally, your responsibility is, given the nature of the organization, is solely with respect to the private sector lenders, not the public domain. Is that clear?
Yeah, our authority as the Ombudsman function and our rulemaking authority relates largely to private student loans on the origination side.
Right. But it's suffice to say that a lot of the insights that you have drawn could be applied to the public sector.
Yeah, and as Senator Corker said, it's very important for us to look at this holistically. Right. And in a recently released report, the Treasury's Office of Financial Research briefly discussed that student debt burdens could significantly depress demand for mortgage credit and dampen consumption, both of which may be critical drivers for the recovery. So again, looking at it holistically, one of our first actions was working with the Department of Education to actually improve the financial aid information and student loan information people find. So we're allowing schools on a voluntary basis to present a simple one-page financial aid shopping sheet, which gives them all their loan options as well as what their estimated payment might be after graduation. And already so many schools across the country have embraced this, and we're happy to enter this for the record.
One of the major issues, of course, is the escalating cost of a college education. And even though you focus in on the private lending sector, you have looked at both public and private institutions. There is acceleration in cost in private universities too, I presume, correct?
Yes, there has been cost increases and increased burdens for debt across institutional sectors.
And they're not responsible for public programs like Medicaid or anything else. What's driving the private institutions to increase their tuition so dramatically?
I'm the wrong person to answer about specific economics of college costs. We're a bit more focused on the financing, but generally speaking, we have seen over a period of many, many years escalating costs of college across sectors in excess of inflation. And particularly, we have seen debt burdens be very high in the for-profit college sector, where utilization of private loans was particularly high.
That goes to just a quick technical question. I ask this because I don't know the answer. Are there prepayment penalties included in the language of some of these private loans?
So the Truth in Lending Act actually bans prepayment penalties for private student loans, which one would anticipate would help facilitate a rather robust refinancing market, since borrowers would not be penalized for trading one note for a less expensive note, but that has not bared fruit.
Thank you. That's a very helpful clarification. And then the other issue, I think, or among several that I have, but let me pose this one. Is there a correlation between the school and the number of private loans? I mean, one of the things that you've suggested, you have now a format where everyone can sort of check it out, but this lack of competition, this are essentially some schools steering students to these private loans, and is there any kind of relationship between the school and the private lender?
So in 2007, at the state level, state attorneys general identified certain unsavory relationships between schools and private lenders. But the 2008 Higher Education Opportunity Act has largely changed that, and we see a much better relationship between schools and lenders. In fact, we believe that involving schools more in the process by requiring certification of student loans, private student loans, would actually help schools better counsel their students on their full range of options. The only marketplace that remains where there is arrangements between private lenders and schools is that presents some risk that's worthy of attention is certain lending arrangements between the proprietary school sector that perhaps are driven to help with compliance with the Higher Education Act's 9010 requirement.
If I may, just a clarification again. You point out that there is a quasi-bankruptcy remedy under public lending, which is to go in and to make it income-based repayment. That does not exist on the private lending side. And the issue here is not, and again, I'm asking the question, so correct me. The issue is not that someone can't file bankruptcy, it's that they can't discharge the loan in bankruptcy? Is that the technical issue in a private lending?
Correct. The private loans are treated differently compared to credit card debt and others.
And that's because of federal statutes?
Correct, the 2005 changes. But private lenders have increasingly told us that they are looking for ways to offer more repayment flexibility. And we think that that's a great opportunity. And again, we hope to engage with lenders and prudential regulators to find win-win solutions for capital adequacy, student loan borrowers, and lenders themselves.
Thank you very much. Thank you, Mr. Chairman.